Hello, 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 hello. Hi all and welcome to another edition of live trading by TraderCast YouTube Live. My name is Phil. I'll be your presenter today. If you're looking for a community of traders, check us out on tradercast.com. If you're looking for education, check out mytradingskills.com. This is a little bit about me. Over the past 10 years, I had the privilege of presenting in front of various different industry events and managed to teach many people how to trade. Some of them were brand new, some of them were people who traded before and they needed the help with specific area of their trading activity. Big disclaimer here, I'll be looking at some live trades and I'll be talking about some very specific levels in popular markets, including some equity indices, commodities and currencies, and these are my opinions and experiences only. Basically, I'm showing you what I think a beginner or maybe early stages intermediate trader should be able to do. So this is very, very simple price action, not many indicators, not many kind of complicated approaches to trading, just basic price and support and resistance and trend. Now I have I have one position open at the moment. I was a short euro dollar yesterday from 114.16 and eventually I got stopped out at 114.29. It just didn't do anything. It attempted to go lower, went sideways, it didn't do anything, so I stopped out with a loss. So this is a losing trade of about 14 points, let's call it like that. I also got filled on my WTI crude, if you remember. I had a pending order and I was looking at 88 level. I was looking at 88 level actively, so I got filled on that. And I'm currently in that trade at the moment with my stop being at 85.50. I'll readjust that. This is quite a wide stop because I think this could be a swing type trade. And then the take profit is at 93, so acceptable risk to reward ratio. But I'll talk to you about more of that in few minutes. This was the analysis for WTI crude that we were talking about yesterday. This is what I was looking at. We were up here somewhere. This is the hourly time frame, so all of these candles are basically equal to 1 hour of trading if you're brand new. And I was looking at the open yesterday or throughout the trading day for the price to pull back down to this area down here towards 88 and then rally from there. So that's the logic behind it. And this is what we got. So we got a pullback and then a rally. Now the longer term trend, if I check this longer term trend, the longer term trend is still intact. The longer term trend is showing me the sequence of low, higher low, higher low, higher low, higher low. So therefore higher lows and higher highs indicates buying pressure. It means people who are greedy are more dominant in this particular market, and this appears to be a corrective pullback. Now there is always a variation to what might happen if you're trading financial markets. So if I see a push lower and then a retest of that level from underneath as a newly found resistance, and then another leg lower, so something like this forming, I will likely get out of my position very, very quickly. So my stop loss is quite generous at the moment at 85.50, but I will likely be moving it closer or looking to stop myself out if that happens, because the daily close below this 88 level would likely trigger some further selling pressure, and I don't want to be in this position at that point in time. What I'm looking for is I'm looking for a consolidation here and then a bullish breakout higher, and that bullish breakout higher should look like this. Okay, so I would like to see this falling resistance trend line here, and I would like to see this hold and then also this hold. So there is an energy build up here. The shorter term price action is pulling into a longer term support, and what tends to happen is you see a buying pressure, anybody who's short was looking to take profits down here. Anybody who is bullish, like myself, is looking to buy there, so therefore there should be a big reversal here. So therefore, if I see a push higher, and in particular breakout above 90, so this could be a level where partial profit taking is possible, but if I see a breakout above 90 and then a retest of that level from above like that, that would be really bullish, and then potentially we could see a continuation to the upside. So this trend line here would be indicative to me of what the price action might do. So we have a couple of them and so on. So that's where I'm with crude oil, and I'm paying close attention to that. I have a very tight stop, sorry, not very tight. I have a stop in the right place. It's quite generous at the moment, but I will definitely be looking to readjust that and have that at a tighter level, because I don't want to lose that much on that particular trade. So where I am now is my gold, crude oil. So apologies, let me just show you where I am with crude oil, and then we can go and cover a few things. We can cover a few other equity markets and some currencies, and we'll do this very, very quickly. So there is my trade. What you're seeing here, this is a 15-minute trade. So, sorry, 15-minute price action chart. Previous low, previous low, previous low, previous low, previous low. So I got filled here when the price reached 88. If you remember, I had a pending order. So yesterday afternoon I got filled, and now I'm looking for a potential breakout to the upside. This would be the area of potential interest: 89.70, 90.50, 91.20, where I would likely take partial profits. I'll decide what I want to do, but that's where I am. That's my trade, and I'm keeping it open, looking for more upside towards 93. Okay, some of the other things that we were looking at yesterday didn't really happen. So so let me just start with FTSE. So that was the first one that we were looking at very, very quickly. The trade setup for FTSE was that I was looking for a pullback to 75.20 for a buying opportunity, and then I would be looking to put my stop at 74.66 with a view to take profit at 76.50. Instead, we saw a breakout above these highs and the price went up higher. So I'm not touching this at the moment. I would likely be looking for something else now. So let's see if this works out. So 75.75. I don't have this set up as a pending order, but it's more of a kind of mental level where I would react to FTSE. And let's see if that happens. We see a corrective pullback and then a reversal that looks like this, or a nice reversal that looks like this. At 75.75 with the view to take stop down to 75.50, so about 25 point of stop or risk in this case for the potential spike towards 76.50. Yet again, multiple times of potential risk for the disproportionate amount of gain. So I'm just looking at silver. Silver is tanking as I'm speaking, coming to an interesting level as well. So let's see. So that's FTSE. Nothing new here with FTSE. Looking to see what's going on with that market a little bit later, and if the price comes to that level, I might react. I was just talking to you about silver. Silver is really, really tanking here. I was looking at 22.60 anyway. Now when I'm talking about that, gold is also coming to a possible resistance. I'm not shorting gold. I would like to buy gold lower. The other thing that I was looking at yesterday was DAX, if you remember, and I was looking for a pullback to buy. Instead, we saw a breakout. Now DAX is coming to some interesting level of resistance at 15,520. What I mean by that is, for those of you to know what these lines are, these are called fib retracements. And they're basically giving us the oversold retracement of this impulsive leg lower, and it's coming to a fairly significant level of interest. So previous low, previous high, previous high, previous high, and then also that kind of fib retracement. So 15,500, 15,520, and then that level could potentially offer a level where anybody who was long would be looking to likely take partial profits, and if they're doing partial profits, the price could possibly correct slightly lower. So speculative short at that level, speculative short. I'm just sitting and waiting at the moment because there's very little economic data here, but if I decide to do this, it's the afternoon, US markets are opening, so DAX, which is a German index, would likely be triggered by what US markets might do rather than European data releases and European traders, which are now kind of almost tailing off and coming back from their fat lunches and also getting ready for the close in about 2.5 hours or so. So I'll pay attention to that, but that's the level with the DAX. The other thing that I want to talk to you about very, very quickly is with Dow Jones. Dow Jones is coming to some major resistance at the moment. We saw this a rising wedge here, which played to the downside a little bit, and now it's pushing higher. So this created a higher low, so this is a correction, and then off it goes higher. Now this area up here would definitely be of interest. Previous low, previous high, 35,720, 35,750. It wouldn't be unusual to see a possible retracement from there, and a move slightly lower towards this area down here again, 35,300, 35,350 for another attempt and a leg higher. So something like this. If that happens, I would likely be looking to find a reversal there to go long and put my stop loss at 35,200. So 150 points of risk in here for the potential extension to the upside and break to 35,700 towards 36,400, 36,450, which would be up here. Previous highs, previous lows, this kind of stuff here. So that's the idea. I will pay attention to this and decide on what I want to do with Dow in when the US markets open. As well. Now let me just show you very, very briefly where I am with my trade. This trade is playing out really, really lovely. Here we go. This is playing out quite nicely now. So this is moving higher, potentially coming to that falling resistance trend line. What I'll do is I will readjust my stop very quickly. I might be looking to take partial profits up here. Might take some money off just to pay myself, and then readjust the stop after that. But this looks really, really bullish. This looks really good. I'm really happy with this trade. Okay, I'm really, really happy with this trade. Okay, so I'm going to leave it running for now and reassess it in a bit. High, lower high, lower high, lower high, lower high, lower high. We are reaching that level now where I should really be taking some money off the table. I'll do it in a minute. Okay, so where am I now? Just moved my stop at 87 at the moment. Okay, so while I was looking at the chart, I just decided to just move the stop to 87, okay, move the stop to 87, and then I'll reassess this. So this is giving me 5-to-1 risk to reward ratio. Come on, breakout. Come on, you want to. Okay. Now, the other thing that I want to talk to you about very, very briefly is euro dollar. I'm still bearish euro dollar, but it just there's no follow through. Sorry, and then we'll cover. We'll finish with gold as well. If you remember, I was looking at this resistance here for euro dollar. This looked like an oversold bounce back. I was telling you about the combination of the candles here that looked like a hanging man or indecision or reversal, and I was looking for a dip below 1 spot 14 for the potential move to 1 spot 13. Instead, what happened, the price broke out higher, and now this can potentially extend to the upside. Okay, so I'm out of this trade at the moment. I got stopped out with a small loss. I've entered this. Actually, let me just show for those of you who came in a little bit later. I was short yesterday from 114.16 and I got stopped out at 114.29. Call it 114.30 for the ease of calculation. So we have about 14 points of loss there. 14 points of loss. I'm still looking to see what might happen, and I don't want to confuse anybody. There's a fairly significant data point coming tomorrow from US. It's basically US Consumer Price Index, and it tells us about the possible inflation situation in US. So US CPI year on year currently is forecasted to come in at 7.3%. 7.3%. If we see a spike in that number, a higher number than what the market is anticipating, this would likely trigger a volatility across US dollar currency crosses, and obviously some commodities as well, but US dollar currency crosses. And the reason for that is that believe that inflation is moving higher, therefore Federal Reserve will likely keep on hiking rates more aggressively throughout this year. And this is euro dollar currency pair. So if we see a spike in US dollar, it could possibly push euro lower, and then we could see that reaction to 1 spot 13 and so on, because this longer term trend is still intact. So this is daily time frame. You can see that euro dollar high, lower high, lower high, lower high. So it potentially although this is more aggressive and it looks like an oversold bounce back, which it is, we could see more to the downside. So that's euro dollar for me. Still keeping an eye on it, and will likely react to euro dollar again. Now, the other thing that I want to talk to you about very, very quickly is gold. Gold. This appears to be pointing to a bit of a consolidation. So I was looking for a pullback to 1810 to buy, with a view to take profit at 1831, with a view to take to put the stop loss at 1800. So 1810 entry, 1800 stop. So $10 in price would be the risk, with the view to take profit at 1830. So $31 of gain, or $30, 3-to-1 risk to reward ratio for gold. And instead what happened is the price did not correct and it kind of went on higher. So I wouldn't be surprised to see a bit of a corrective pullback now from these levels. I don't know if I should be shorting gold. If I'm shorting gold, I'm going against my initial kind of swing type setup where I would like to buy at 1810. I'll reassess it, but I would still like to buy around 1810. I would still like to buy around 1810 with the view to take profit at 1830. I might go counter trend here and short when the US markets open. I'll reassess everything, and then in that case, if I enter around here somewhere 1825, my stop would be at 1830, so $5 of risk here. So then this trade would look like this. So let me just show you the way this trade would look. It would look like this. So this would be the risk, this would be the entry, and then I would be looking to take profit down here at 1815 or 1810 or thereabout. So $5 or $6 in price of risk for the potential 10 to maybe even $15 of potential gain in price move. So not in this trade. I would rather be buying than selling, but that's where I am with gold at the moment. That's where I am with the gold at the moment. I'm still looking at this as a buying level. Just realized the time. Hopefully you found this informative and beneficial. If you are looking for more in-depth analysis, feel free, get in touch. I'll be more than happy to talk to you all. Trade. In the meantime, stay safe, happy trading, and I'll speak to you all tomorrow. Bye for now. Thank you. Good luck.